Welcome to Let's Build Success Together. I'm Titus Walker. Today I'm going to talk to you a little bit about credit. I've been getting a lot of questions about credit, and nobody seems to really understand credit. Now, I think you should understand credit. I think it's something that you should research, because without good credit, you're probably not going to become a millionaire. Now, it's possible to, but good credit kind of helps in America because the way the banks and the system is set up, debt almost equates to wealth. And I'll explain that a little bit later in videos, but we'll start with explaining credit. Now, credit has a couple different factors. One of the major factors is time. Now, time is the time that you've held a credit account. A credit account can be a credit card, it can be a mortgage, it can be a car loan, it can be a bank loan, personal loan, a lot of different things. Now, when you acquire a loan, the bank, and we'll just use a car loan as an example. So when you acquire a loan, it's taken on as new credit. Now, anytime you have credit and you take on new credit, your credit score is going to take a dip, because the banks see that as a risk. They don't know whether or not you're going to pay that new credit on time. So if you have a car loan and you take on that car loan and let's say you start making payments on time for a year. Now that bank sees a year of history, they normally will bump your credit score up a little bit, and sometimes a little bit month per month. Now, that first thing is the length of time. The second thing is the amount that you've used of the credit. So let's say the car costs 10 grand. It costs 15, you put 5 down, and now you have 10 grand of a car loan. So that 10 grand in that car loan is now maxed out. You have 10 grand in credit, and that credit is fully maxed out. Now, you always have to put yourself in a bank's position. If you were to ask me for money and you already had a loan and that loan was maxed out already to the full, you hadn't paid it down at all, then would I be willing to lend you more money? Probably not. And neither is the bank. The bank would like to see that you've made payments or paid that balance down. So that's the second thing, is how much are you using the loan that you have? Now, those both equate to about 35%. It's 30% for the time, and then it's about 20%. It's actually, 50% for those two. So you got about 30% for the time. I think it's 30 to 35. And then you have about 20 to 25% for the actual balance itself. And there's a few other things. So you have delinquent accounts, you have the amount of rolling credit, and then you have any closed accounts. So we're going to talk about a few things. We started with the new. Let's go back to the car. So once you got that car as a new loan, again, you took a dip on your credit. Now, most times and most people say to put a down payment on the car so that you have a lower balance that gets funded, but that's not the case. I would like to suggest to you that anytime you're going to go buy a car, do not put anything down on that car. Now, sometimes you can get a higher interest rate because of it. Now, that can be a problem depending on what your credit is already. But it's safe to say if you have a good credit score, then your interest rate is going to be pretty low. But what you do to keep your credit score high if you plan on getting financing is the better thing is to actually buy the car and then take the down payment that you were going to put on the car and immediately put that into the car. So now instead you got a $15,000 loan, but you paid down $5,000 of it. It gives you a smaller balance and a better credit score. So you don't take a hit on your credit score as heavily. Now, depending on what that changes on your interest rate, it's something that you're going to have to decide. But I still strongly consider, or would strongly consider, that you put that money down after you finance the car instead of before. The next portion of that is the time. So because it's a new loan, again, you're going to have to build up time making payments on time. So let's say you're just starting out and you want to get yourself a good credit score so that you can get a better interest rate. Now, one way to do this, and I highly suggest if you plan on having somebody do this, either talk to a professional or have your parents watch this video. So let's say you're like 18, 19, 20, just starting out and you don't have credit. An easy way to build your credit up is to actually have your parents put you on as an authorized user. Now, an authorized user sounds pretty scary for the parent, especially if they don't trust you. But what an authorized user does, it doesn't necessarily give you the ability to run up a credit card with them, because they can actually make sure that a credit card doesn't ever get mailed to you. So you won't actually have a card that you can use, but it immediately gives you their history. So you want to make sure that they're putting you on a card that has a low balance and that they've had for a long time. But once they do that, you will see a significant boost. And that's one way that you can actually raise your credit by an upwards of 100 points within a matter of less than 30 days.
All I ever ask is keep it 8 more than 92 with me 100.
As soon as they put you on, your credit score will take a huge jump. So if you plan on buying a car or doing anything of the sort, make sure you do that. Now, one thing for the parents, it does not affect your credit score at all. They cannot change anything on your credit or your credit card. So giving them as an authorized user is different than co-signing. I would never co-sign for anybody, nor would I recommend it for anybody. But if you're doing it as an authorized user, then now they just get the benefit of your credit history. Now there's two caveats. One, again, for the parent or the person that's adding them to the credit, you want to make sure that they do not get the ability to get access to your card unless you want them to. You want to make sure it's on a low balance on a card that you've had for a long time. The other thing is, again, they do not get access to your card, so you don't have to be afraid of them messing up your credit. It does not impact your credit even a little bit. Now, for the person that is actually being added on, if it impacts your credit in a good way, great, you did good. If you were to be added to a card and then that card's balance gets run up, you can actually take yourself off of it as an authorized user and it just goes back to the way it was. So that's another way that you can actually help your credit if something happens and you don't really trust it or whatever. The other thing, again, paying down that balance on whatever card you have, that's an easy way to boost your credit right away if you need to get a quick fix on your credit. Now, final thing, I do want to talk a little bit about, and we're going to go more into detail into credit later on, but I do want to talk a little bit about delinquent accounts. A lot of people say to go ahead and pay them and get rid of them. Here's the thing with delinquent accounts. Again, they look at the time. If you've had a delinquent account for 4 years, then the bank is seeing clean history for the past 4 years up since that delinquent account. As soon as you pay that delinquent account, it starts it all over again. So what the bank sees is that there was a delinquent account that was paid yesterday or today or a month ago. That changes everything, because whereas the delinquent account was 4 years old, now it's brand new and it starts all over. Because the bank doesn't delete it, it just makes it a new account that was paid. It only shows from the date it was paid. It does not show anything else. So banks consider that to be a bad thing. So sometimes you're better off just not paying it, or going to the person and saying, I will pay it, but only if you agree to delete it or wipe it from my history so it shows nothing. You don't want it to show paid, and you don't want it to show that it was satisfied, which a lot of times they will settle. So if it's settled on, then that's another thing, a whole other thing to go into. So those are just some of the tips. Again, I'll go into more detail, and you can actually comment if you have any questions. But that's just the basics on helping your credit. And credit is something that I deal with every day in the real estate business. So keep that in mind. Again, if you have any questions, let me know. But we'll go more into detail later on. Thank you so much for watching. Let's grow successful together. Thank you for watching. Let's build success together with Titus Walker. I am Titus Walker. Make sure you like and comment, and go ahead and click that subscribe button. Think of this as your 30-day trial period. If after 30 days you don't learn anything new, then go ahead and unsubscribe. But for now, keep watching. We'll be dropping videos. Dropping videos weekly, and you got to learn something new, because I'm going to be putting out new material, stuff that you have never heard. So let's go ahead and build success together. Thank you.
That's what you need.